Let's face it, not all of us have the time to choose funds, build portfolios, and rebalance them every time one market outperforms another. Also, with so much information out there, investing can be hard. We need to make it as simple as possible. This is where the Vanguard LifeStrategy funds come in. They are an all-in-one fund that give you everything you need to build a balanced portfolio without having to think about it. In this video, we're going to explain exactly what the LifeStrategy funds are and how to choose one that's right for you. Hello everybody, my name is Lewis and welcome back to iQinvesting, where we talk about saving, investing and everything in between. Make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK for more stock market and Vanguard related content just like this every week. Quick disclaimer, at iQinvesting we are not qualified investment advisors, we're just amateur investors who simply love saving and investing. With so many investment options that are available to the average investor, choosing a portfolio that's right for you can be difficult. When building a portfolio, it's vital that you choose an asset allocation that matches your investment horizon and risk tolerances. But how do you do this? What percentage of bonds should you hold? And what funds should you hold to make up your portfolio? These questions can be complex to answer for most people. Many investors are seeking simplicity. It was this mission for simplicity that inspired the birth of the Vanguard LifeStrategy funds. So, without wasting any more time, let's get right into explaining exactly what a LifeStrategy fund is. The Vanguard LifeStrategy funds are one-decision funds that you can invest in to constitute an entire portfolio. The best way to explain how they work is by looking at the different options that are available. On Vanguard's website, there are 5 options that are available. These are the LifeStrategy 20, 40, 60, 80 and 100% funds. All of these funds are available for the low ongoing charge of 0.22%. The percentage in the title refers to how much of a fund will be invested in equities, with the rest being invested in bonds. So, the LifeStrategy 60, for example, invests in 60% equities and 40% bonds. But what makes this something you'd want to invest in? Well, if you wanted to make your own 60-40 portfolio, you would have to choose a set of funds to make up the 60% equities of a portfolio, and you'd have to also choose a set of bonds to make up the other 40%. This means that a lot of decisions have to be made, and as investors, we don't always have the time or expertise to make these decisions. Not to mention the fact that you'd have to rebalance your portfolio every year or so to ensure that the asset allocation still matches your risk tolerance. But complexity goes out of the window with the LifeStrategy funds. All you have to do is pick from one of the 5 funds, invest your money, and the all-in-one fund will do the rest for you. The fact that there are only 5 options is actually a good thing. It really adds to the simplicity and it emphasises how little you actually have to think when investing in the LifeStrategy funds. But how do you choose a fund that is right for you? Well, there are 2 main considerations that need to be thought about: your investment horizon and your risk tolerance. To help you think about your investment horizon, Vanguard includes a useful graphic on their website. It is explained that the more shares or equities that you hold, the more risk you are taking on, and the higher the reward you can expect. Therefore, the less equities you hold, the less risk you are taking on, and the lower the reward you can expect. So, starting on the left-hand side of the graphic, there are the LifeStrategy 20 and 40% funds. These are more suitable for short-term investing goals, which Vanguard defines as a 3 to 5 year investment horizon. This is because the higher allocation to bonds means that the chances of the portfolio producing negative returns over this short investment horizon are extremely low. So, if you have any short-term goals that you're hoping to save and invest towards, the LifeStrategy 20 and 40 funds could be right for you. In the middle, you have the LifeStrategy 60 fund, which covers the popular 60-40 portfolio that many investors go with. This fund is associated with medium-term goals, which are considered as being between 5 and 10 years away. Finally, you have the higher equity allocations, which are the LifeStrategy 80 and 100% funds. These have the highest expected returns. These are associated with long-term goals, which are considered as being over 10 years away. But as we mentioned before, your investment horizon isn't the only thing you need to think about. There is also your risk tolerance. Even if you have a long investment horizon, but you have a low tolerance to risk, one of the lower percentage LifeStrategy funds could still be right for you. If you're worried that market downturns will cause you to panic and sell, we do recommend that you consider holding some bonds in your portfolio. So, don't feel like you have to invest in the higher equity funds if it is something that you're not comfortable with. We'll take a look at what the LifeStrategy funds invest in to help us determine whether they're right for you. By clicking on the LifeStrategy fund that you're interested in, you can view the portfolio data to review the holdings of a fund. This list shows the holdings of the LifeStrategy 60% fund and their relative weightings. For the bonds allocation, there is a global bond index fund, as well as a combination of other bond index funds from around the world. For the equity allocation, there are 7 different equity index funds that make up a globally diversified selection. One thing to note is that all of these equities make up around 60% of the portfolio. However, when we look at the UK equity allocation, we can see that the UK fund makes up 15% of the total portfolio. This actually means that 25% of the equities are invested in the UK markets. Considering that the UK markets account for around 4.3% of the global markets, this is a six-fold overweighting. So, despite the fact that the portfolio is globally diversified, it is not an accurate representation of the global markets. In Vanguard's defence, I think this is done to keep the cost of the fund as low as possible, as the UK markets are cheaper to access. Considering that the LifeStrategy 60% fund is an all-in-one solution that makes our lives easier, the trade-off is probably worth it for most people. However, let's take a look at the LifeStrategy 100% fund to put this more into perspective. This list shows the portfolio data for the LifeStrategy 100 fund. As you can see, the fund invests in a range of index funds that constitute a globally diversified portfolio. But again, the UK allocation in this fund is 19.3%, which is around 5 times higher than it should be. For the LifeStrategy 60% fund, this overweighting can be excused. This is because the fund has the added benefit for being an all-in-one solution for investing in both equities and bonds. But the LifeStrategy 100% fund invests in just equities, so why should we put up with the heavy overweighting? Well, you simply don't have to. If you're investing in 100% equities, you may be better off investing in a 100% equity fund that has a more accurate representation of the global markets. There is an index fund that does this really well, which is a FTSE Global All Cap Equity Index Fund. Taking a quick look at the All Caps portfolio data, we can see that the market allocation is much more representative of the global markets. The LifeStrategy 100% fund has an ongoing charge of 0.22%, whilst the Global All Cap fund has an ongoing charge of 0.23%. We think that this 0.01% difference is very much worth it for the more accurate global diversification that you attain. If you do want to invest in 100% equities, the FTSE Global All Cap Equity Index Fund still acts as an all-in-one solution that you can invest in, and the fund does all the work for you. So, in summary, the Vanguard LifeStrategy funds are a great all-in-one solution for investing in a portfolio that is right for you. You can simply pick a fund that matches your investment horizon or risk tolerances, invest money, and you'll do just fine. One thing to consider is that the funds have a heavy bias towards the UK markets, but this can be excused for the simplicity that they offer. However, if you do want to invest in the LifeStrategy 100 fund, there are probably better options available when it comes to investing in 100% equities. And with that, make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK for more stock market related content every week. If you found the video useful, make sure to smash that like button and share it with a friend so that they can learn about Vanguard LifeStrategy funds too. Do you have any questions about investing in the LifeStrategy funds? Let us know in the comments below. As always, thanks for watching.